Hello, Assalamu alaikum. Yesterday we did a sample paper of 7707 available accounts paper, and today two questions we did yesterday, inshallah, and we complete the paper today. So let's go to the paper. Uh, Now allow me to wear my glasses so I can see what's happening. Okay. Amla is a trader, financial year's end on 31st December. Amla maintains a combined account for rates and insurance. On 1st January 2016, 3 months rate were outstanding in 4 months insurance totaling 700 were prepaid. So what we have to do here, first we will write here 2016, here 2016, done. Then we will write here January 1st, Jan 1, and here we will write Jan 1. Balance BD for insurance because asset it's going to appear over here. Okay. And that would be how much? 700. And balance BD for rates will appear over here 480. Done? Because it's payable and it's prepaid. Okay. Now paid for the month. Here bank payment for insurance. Sorry. First we'll take rates. Okay. Bank payment for rates. How much? 2000. 2,560. It's payment for 16 months. 2,560 divided by 16. 160 per month. Now, when we are paying for 16 months, it means 3 months you have paid for the outstanding, 12 months for 2016. Total 15 months and 1 month is prepaid for January. So that is going to appear over here. I'm working on rates first. December 31st, balance CD. For rates would be 160. And on December 31st, transfer to income statement for rates would be how much? 560 divided by 16 is 160 multiplied by 12 months, 1920, 1922. 12 months rates would be transferred to income statement. Okay. Now, when we are paying for insurance, bank insurance, we are paying how much? 2,400. 2,400 we are paying for 12 months. So 2,400 divided by 12 means 200 per month. So now this payment for insurance is made for 12 months from April. So 8 months is going to be included in 2016 and 4 months is prepaid. So prepaid would be 800 on 31st December. December is too long. December 31st. Balance CD for rates is how much? 800. So how much is transferred to income statement? For insurance. Is how much is transferred now? 700 is prepaid, plus 2,400 is paid, 800 is your prepaid, 2,300 is going to transfer to income statement. So this is the end of this account. Now what we have to do? Okay. Now get the totals. Totals must be same for both the sides. 700 plus 2560 plus 2400, 5660. I'll show a bigger one. And here, let's check 480 plus 1920 plus 2000 plus 116 plus 800, 5660. What you have to do, please don't forget to do it. Otherwise, your marks will be deducted. January 1st, balance BD. Balance BD is how much? It's 160. And what about insurance? So this is counted. Now you get the 9 marks. Nobody. Identify section of statement filed at 31st December 2016 in which the balance on the rates and insurance account would appear. Yes, current assets. Why? Because both expenses are prepaid. Both expenses are prepaid. So they are going to appear in current assets. Okay. Now, on 1st October 2016, Amla decided to submit part of the annual rent of 4,800. On that, she received rent 2 months rent. Now, 4,800 rent is for 12 months. So she will get 400 rent for a month. And she has received now 2016, October 1st. October 1, she received 800 for 2 months rent. But on 2016, December 31st, transfer to income statement would be for 3 months because the third month rent, the December rent is not yet received, but it is earned. So it is going to be transferred to 1,000. And here on December 31st, balance CD must be 400. So the total accounts same 1200. Done. Now, what is your responsibility? Please do write balance BD. 1, balance BD. Oh, what I forgot. What I forgot is to write the new one. So we have to write over here 2017. Then 1. Now, next page, next part. Identify the section of the statement of financial statements on which the balance of the right is contained in the current asset. Why? Because revenues, sorry, we can write accrued revenues are well done. Okay. Now advise Amla whether or not she should start paying her rates if this may support your answer with what is the way. Amla has been given the opportunity to pay her rates monthly by diagram. Suppose she signs a standing order with the bank. what will happen if she signs a standing order with the bank? She will not. The payment would be easy, payment would be safe, payment would be made on time. But the disadvantage, she has to keep a minimum balance requirement up to the date of due for standing order. She cannot choose the time of payment. This is the disadvantage. You will give the answer by yourself. Justification. Okay. Wasim is a trader has financial years end on 31st March. The total of his trial balance 31st March 2017 did not agree. The shortage, the difference was the shortage of the debit side of 495 that was entered in suspense account. Okay. Now, what we do, we have to make suspense account. Okay. So, 2017. 2017. March 31st. March 31st. Balance reading. Or you can write difference of in trial balance, that is on debit side, yes, 495. 495. Now see the total of a page of purchase account 3,842 has been carried forwarded as 3,824. This is error of transposition and of transposition affecting transaction. So 3.42 minus 3. The answer is 18. The purchase account is understated by 18. So what you have to do, you have to debit purchases, you have to increase purchases, so you are going to debit purchases and here you have to credit. Suspense is credit, purchase is debit, suspense, credit how much? Done? Now, second error. A check received from DEC Limited had been credited to DDE Limited. This is error of commission. This is not going to affect the trial balance. Nothing to do with suspense account. The balance of petty cash book $100 had been omitted from the trial balance. Okay, $100. When we have omitted balance of petty cash book, that is it from the trial balance. We have to show the trial. So we will debit petty cash book and we have to credit over here. How much? Done. Now move to next. Repairs to motor vehicle 283 had been debited to motor vehicles account. This is error of principal, not going to affect the trial. Purchase of feature 2000 credit for OS supply had been debited to OS supply and credit feature account. This is error of complete reversal, not going to affect the trial balance. The total of the discount allowed column in the cash book 250 had been credited to discount received in the ledger. Now, in this case, we have to be very much careful. This is their favorite. Okay. Discount allowed has not yet been debited. So, what we have to do, we have to debit discount. Discount. Now, we have to debit discount allowed. So we have to credit suspense. Discount. Debit, suspense, credit. How much? Because discount allowed has not yet been debited. So it's going to be debited and suspense is going to be credited by 250. And discount received was wrongly credited, so it is going to be debited. Discount received and suspense is going to be credited. this error is going to affect twice the suspense amount. Okay. The total of the analysis column of the stationary particular has not been transferred to stationary 67. So what we do, we'll debit stationary and we get credit suspense with stationary. How much? The amount of stationary? Done? Okay. So if we get the totals over here, you know, like what does it mean? This should have suspense account should not have any balance sheet. But here we are coming up with a balance sheet 495. It means 190 is balance sheet. It means still we have to search for $190. So, 21. We have to search for one. This is a technical error in the question. But we can't do anything because it is given in the question. Suspense should always be a balance account. It should not have a balance sheet be a BD at the end of the year. But okay, it's just a question given in your paper, so what we can do. It means 190, error of 190 is still missing. We don't know why 190 is missing. Prepare generator to correct two of the errors which do not require correcting by means of a suspense account. So we have to go back. There were, I think, three errors. Okay. One is omission, then principal, and then complete reversal. So we have to correct any two errors. So what will we do? You have to write error number over here, and you have to make the correction. Now, see the question. See the question. Error number 2. You have to rectify only two errors. Huh? Narrative is not required. So what we do, we create a DD account. So what will happen? DDE limited is debited, and DEC limited. That was actually created. That was supposed to be created actually. And how to rectify error number 3? That's error number 4. Error number 4. So what we have to do? We have to debit repairs expense, and we have to credit motor vehicle expense. How much is the repair expense? It's going to be debited 283, and motor vehicle is going to done. Next error. No, you have to rectify only 2, but for your purpose, for your understanding, I'm going to correct the third error also, error number 5, which is a transfer complete reversal error, which is a fixture from OS supplies. So what we have to do, we have to debit fixtures OS supplies by double amount. That is 4,000. Error of complete reversal will always be rectified by double amount. Always. Okay. Okay, class. So I've rectified all 3 errors. You have to do 2 only in the paper as given. Now, the next question is machine prepared draft financial statement. Machine prepared draft financial statement. Complete the following by clicking a tick in the correct column to indicate whether the profit for the year will be affected by each of the errors. Ignore depreciation of non-current assets. Okay. Okay. Now about error number 1. The error number 1 was of purchases. Purchases had been undercast. So yes, this is going to affect the trial balance. They have already done. Now we have to take. Now error number 2 is a check issue. No, it's not going to affect the trial balance. Yes, because it is error of it's error not affecting trial balance. So it's an error of commission not going to affect the trial balance. The balance of petty cash fund had been omitted from the trial balance. The balance of petty cash, that's not also affect going to pay. It is going to affect the cash, the current asset, not the profits. Then number 4, error number 4 says repairs to motor have been debited to motor vehicle accounts. Okay, it will yes. When we rectify this error, this is definitely going to affect the profit because expense will increase. After rectifying this error. Error number 5 has no effect on profits. It's about fixtures and supplies. Okay. Error number 6. The total of the discount allowed the cash. Yes, this is going to discount. Is going to affect. Okay. Number 7. Stationery where 16 had been transferred to stationery account. Yes, it's going to because this is an expense. Not recording or omission or any problem with the expense is going to affect the profit. Done? Okay, next, move to the next question. The last question. K Limited provided the following information. Issued share capital consists of unallocated shares of 0.5 each. Okay. On 1st of 2016, general reserve 4,805. The profit for the year 2017, 9,000. 2,000 was transferred to general reserve and term dividend of 4,500 was paid during the year. No dividends were proposed at the end of the year. Okay, preparation for changes in equity. Okay. On 1st October 2016, what happened? Now, ordinary share capital is 1,80,000 or 0.5 is 90,000. So 90,000 we have shares. Done. Now, what we have to do on the debt general reserve is how much? 4,000 and retained earnings 5,500. This is 4,000 and this is 5,000. The total is 99,500. I'm sure. Done. Okay. What happened? Now, the profit for the year was 9,000. So we'll write over here profit. We added to the general reserve. 2,000 was transferred to general reserve. Now, in this case, 2,000. So general reserve is going to be added by 2,000 and retained earning is going to be reduced by 2,000. So this is not going to affect the totals of the retained earnings. Then interim dividend 4,005 paid during the year. Okay, interim dividend. is how much? So it's going to be reduced from 4,000. Done. So on 31st September 2017, there is no change in share capital. They will remain same 90,000. 6,000 is your general reserve now. Okay. What about this? Retained earnings has a big change. 5,500 plus 9,000 minus 2,000 minus 4,500. So it is going to be 8,000. Okay. Now this column 99,500 plus 9,000. 1,08,500 minus 4,500, 104,000. So if we add all these columns, 90 plus 6, 96 and 8, 104,000. So column, so the total from this level and from this level, vertical and horizontal are same 104,000. It means we have 1.5 minutes. Now, K Limited provides the following information on 30th September 2023. Current ratio. Current ratio means current asset divided by current liabilities. Am I right? Current ratio means current assets divided by then. So now what you have to do, you have to calculate the current assets over here. So current assets in this is if you take that total, the net current assets, non-current assets. No, we don't get non-current assets. What we need, inventory 5,100. 5,100 inventory plus trade receivables, 8,500. So total current asset is 13,600. 13,600. Okay. Divided by current liabilities. How much? Current liabilities we have bank overdraft 1,100 plus trade payables 4,200 plus other payables 11,800. 11,000. Okay. So this is 11,000. So the ratio is 1.15. Answer would be 1.15. Now, next is quick ratio. Liquid test, liquidity ratio, or acid test ratio. So, what we have to write over here? Acid test ratio. Quick acids. Acids divided by now, quick assets means we should not include inventory in current assets. So we have only one current assets left, 8,500 trade receivables. Okay, So it means that there is only one current quick asset, 8,500. And current liabilities, obviously, we have same 11,800. So the ratio would be 8,500 divided by 11,800. Answer is 0.72. Ratio 1. Answer is 0.72 ratio 1. This is the problem. Okay. Return on capital employed. Now we have to calculate capital employed. Capital employed is calculated by using what? What we are going to take as. Okay. Now the capital employed we need for a joint stock company. Shareholders' equity plus long-term liabilities. Because long-term liabilities are not given in this question. It means we take only shareholders' equity 104,000 as capital employed, and the profit is 90. So what we are going to write over here? ROCE, return on capital, right? Returns divided by okay. So now in this case, in this question, what happens? The return is 9,000. Capital employed means the total shareholders equity plus long-term liabilities, because long-term liabilities are not given. So we'll take only shareholders equity, that was $104,000. $104,000. Got it? So 9,000 divided by 104,000. 9,000 divided by 8.65%. What I forgot to write over here is multiply by 100. So if you multiply by 100 over here, the answer would be 8.65%. 8.65. Done? So we want 6%. Directors of K-Limited wish to improve the liquidity and profitability of the finance directors say that the business should reduce the amount of inventory by 50%. Advise better not they should reduce the amount of inventory. Sir, this is not my marks. If you are going to reduce inventory, personally, yeah, I don't like these types of questions in accounts paper. Yeah. It looks like a BS paper now. Okay, accounting should always involve calculations. Yeah, we are good at calculations. Okay, now it's a BS like question. If you reduce inventory, you might not be able to give to your customer goods on time. This is the main problem. So if you reduce inventory, it means sometimes it happens supplier will not be able to supply you in time. Again, you lose sales. Okay. If you do not have, if you reduce supplies, you will have an advantage of storage cost will be reduced, storage hassle would be reduced, your payable would be reduced. So, in both the cases, reducing inventory by 50% would never be a good way to do business, because, in my opinion, write your own opinion, I have no problem. K-Limited allowed states to customers a period of 60 days to pay their account. For the year, the 20 turnover was 69 days. State whether K-Limited would be satisfied with the trade receivable turnover. 69 days. 69 days. Not satisfactory. Unsatisfactory. Not satisfactory. Because 69 days that turnover is very. Pay limit allowed 30 days in which to pay the accounts to states of what we guarantee. Mr. Tradable turnover was 52 days. Now, if turnover is 52 days, it means credit period is 30 and you are paying after 22 days of credit period, that's 30 and 52 days. So that is going to damage your reputation, your relationship with the supplier. You might impose interest on you. You might lose discounts and so many facilities. So it's not good payable turnover. We have to improve our payable turnover. So this is it. That's all for today. So inshallah, we will be coming tomorrow with AS paper 1. It's MCQs. Inshallah, tomorrow we'll upload. Kindly subscribe my channel if you like it. And follow me. Any suggestions, any queries, any problem, anything you want to ask me on this one. Thank you. Allah Hafiz.